some that had assets for up to $10 million. But I also was training other agents. So I know a thing or two. In addition to that, I have a corporate accounting background. And I've also worked with many companies here in Maryland as well as nationwide, with their books, records, as well as trying to get their internal controls and their processes in place and making sure they have what they need to not only make sure it's recorded well, but that they understand their money. And so that way they can also make decisions based on their own numbers and not necessarily what others are telling them or outside companies and trends. So that's what I'm trying to impart on you a little bit tonight. So we want to buckle in as of right now. All righty. Let me see, is it going to let me go to the next slide? So before we get started, just wanted to, I can't see if it's sharing or not. Are you guys able to see the screen? Let me know, because I don't know if it stopped sharing. Look like it may have stopped sharing.
It
No.
did. It stopped
Okay.
sharing.
Okay, that's what I thought. Let me, I was looking, I'm like, it looked like it stopped sharing. All right, let me get back in there. Hold on 1 second. There we go. And then here we are. There we go. So just as an overall disclaimer, all this is to say is that all the information tonight is very general, but it is as current as some of it is today, because I made sure I went through some of the slides just to make sure nothing has changed. Tax and accounting changes regularly. So I try to make sure that everything is as up to date as possible. Anything that's stated today doesn't establish any kind of client or practitioner relationship between the two of us. But, if in fact you ever needed anything, the information will be put out, and I'm sure Colette has already shared that information. So there we go. So first and foremost, I want you guys to know 60%, a lot of businesses don't feel that they understand their accounting. Do any of you share that sentiment that you don't feel like you understand your accounting? And if you feel like you do, share that too, because I'm trying to get a pulse of the room. Yes, you don't feel okay, Isis. I see you. Raquel said, yeah, I don't feel like I understand. Just a little. Okay, Teresa. All right. A little at times. Yes. I'm in the middle. Okay, Nick. All right. Well, and 72% of self-employed people, though, they handle their own accounting. So, and there's a reason for that. Most people do that simply because it's a cost factor. Like, let's be clear, like most people, when you first start off in business and it's just you're trying to mitigate the cost of your business as much as possible. So you're like, okay, I can understand money going in and money going out. I'm going to handle this myself. But as it states, you're not alone. Reason why I shared that statistic, I want you to know you're not alone if you feel like you don't really understand or get anything. There are people who are well established in their business. That statistic is based off of companies and business owners who have been in business. Either they just started or they've been in business for at least 5 years. So there's some people who were polled in that who have been in business for some time and they still don't understand their accounting. It's okay. A lot of people don't, but I'm hoping tonight to change that narrative. So I've went through all the things about me. Trust me, my LinkedIn is fabulously updated, but I am a mom and a wife, and my 6-year-old is downstairs somewhere, so I can hear her. So life of a mom. What I want you to know, though, is when it comes to accounting, it is the language of your business. It's so much so the language of business that if in fact I was to go to another country, I can look at a statement in another language I don't know, but because of the way that it's formatted on that paper, I have a general idea of what they're communicating, that this is the revenue, this is the profit, these are the expenses. There's a reason why. If any of you, have you ever noticed, and feel free to chat it up, you ever notice how We're about to do a pitch competition, right? You guys are preparing for that. Shark Tank. What's one of the first things that they do? As soon as the person comes in, they're beaming, they're gleaming. What's one of the first things they do in that chair? Anyone want to put in a guess? I'm looking at the chat right now. They want the numbers. Thank you, Nick. They go straight to the back of that little pamphlet or their booklet or whatever they have, exactly. And they look, it'd be all cute. It'll have everything from, they went to like Staples or, Kinko's, made it all cute. They don't even care. They go straight to the financials. They look at it and they basically want to see, because your numbers tell so many stories about what's going on with you. Your numbers can tell me whether or not you are, even if you're making $1 million, whether you are profitable, meaning that you have enough income left after paying all the expenses to run the business or not, right? Because you could be making $1 million, but if 900,000 is going out the door, the business that's making $500,000 but only spend $100,000 is actually more profitable than you, even though you are a better income generator, right? Yup, margins. Thank you, Nick. You said it makes you anxious, Janet. Don't be anxious. Look at it as a learning tool, because what that means is this: you need to make sure, first and foremost, as a CEO, that not only do you understand what you are reading and what you see, but use those numbers to also help you make decisions about what is going to be your next steps. So I don't want to take for granted that everyone here is well versed in the language of money and language of business, which is accounting. So we're going to go over some very basic terms. Revenue. So revenue, just so we are clear, is money that's earned from services or products. So, and I'm going to use real life examples. Any of you ever see people on social media say, I got a $10,000 sale today. My business made $30,000 today. And you're like, where? How? Where's my check? Any of you ever seen it? Like I said, I'm looking in the chat, so feel free to share. Right. Exactly. Exactly. They're talking about revenue 9 times out of 10, right? 9 times out of 10. Now, some of them, it could be paid in full. I'm not going to sit here and, put anyone down. Some people are dealing with maybe corporate contracts or whatever the case may be. So they may have actually received that $30,000, $50,000, $100,000 or such. But when you typically see a lot of people say that, they're talking about the total value of the service and or products that they're going to provide. And that's basically the money that they have earned. So that's revenue. Expenses, it's the cost of running your business, but it's not necessarily the cost that's associated with any products that you sell. So for any of you who are product based, I saw some friends said they make specialized gifts. This would be the light bill for you. This would be the rent and everything. But what this wouldn't be is, let's say one of the gifts that you make are mugs. The cost of the mugs would be listed under something else. And we'll get to that for a minute. But because those are the things that you sell, right? But these expenses would be everything else. So that it costs to run your business. I just wanted to use that as an example. So using that same example, cost of goods sold. Cost of goods sold is directly related to making the products that you offer for sale. So using our lady who sells gifts, let's say she sells mugs, the cost of the mugs would be listed under here because they are the product that you are actually using to make money, right? And if you had for some people, it's a judgment call. Like if you said, what about services? Okay, sheets, oils won't be considered expenses. Yes, they could be. That's a judgment call on your part, Isis. When it comes to services, it's tricky and it's by industry. So for something like massage therapy, it goes underneath alternative health. So with alternative health, if you are selling the oils separately, like if people can purchase those oils from you and you actually put them together and you make the essential oils and you put it in a bottle and such, then you could have it where like those bottles and the cost of the oil is a part of cost of goods sold. But if you are using the oils just only you, and that's a part of the entire experience for getting a massage from you, then it could be a judgment call on your part, and you can just make it a part of supplies, which would then be a part of expenses. So it would be up to you at that point. Okay, you're welcome. So at the end of the day, right, after we look at all the revenue that we have and all the expenses and costs, we're going to basically subtract them. Revenue's positive and expenses are and costs is negative. What's left, right, will determine if you have a net profit or a net loss. So in the accounting world, net profit is interchangeable. And there's a reason why I split it out, because this is me thinking in the tax brain. In the tax world, net profit is always positive. Net loss is what it sounds like. It's negative. But in the accounting world, net profit can be positive or negative. Really simple example, you made $1,000, you spent $500, you have a net profit of $500. That's positive, right? But same example, made $1,000, spent $2,000, you now have a net loss or net profit, depending on how you want to say it, of negative $1,000. So those are just basic concepts. Those are the most general terms. There's a lot of other accounting terms that are out there, but just to get us through tonight, I just wanted to make sure we were very clear about those terms in particular. And we're going to talk about some others as we go. If any term comes up, please, 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 there are no questions. I do not mind answering. Feel free to say, hey, can you explain that term real quick? Okay. Because what we need to leave here tonight is I want you to be informed of how to handle your money and to hold the people, if you do hire anyone, accountable. Okay. Assets. So assets is anything the business owns that has a monetary value. So cash is an asset. Inventory is an asset because these are products that are finished that you have sitting waiting to be sold. They have a monetary value. What their monetary value is the sales price that you plan to sell each one of them for, right? Any property that your company owns would be an asset to you. Sometimes assets are not things that you can touch. Sometimes it could be a patent. A patent could have a monetary value to you. Some of you who are in the service business, your client list, sometimes you hear all the time people say they sold off their client list. It could have a monetary value. So assets are anything in your business that your business owns that has a monetary value. And that includes the cash itself, because it has a value. Equipment as well, yes. Liabilities. So liabilities are any debt your business has not paid yet, any debt. So this could be a loan. This could be a company credit card. This could be on account credit with vendors. Some vendors allow you to go ahead and get items from them, and they'll basically say you have like so many weeks or a month or two to pay us back. Any like same as cash agreements, those kind of things, any kind of liabilities that you have where you have not physically taken any cash out of your account and sent it over to someone, that's what a liability is, any debt. And then the equity. Equity is what's left. It's the value of your business as its owner or investor. So, sometimes people don't necessarily operate as its owner. They're just an investor. They have an interest in the company. So they would get a portion of the value, but it's the actual number of what the company is worth after you use the company's assets to pay the company's debts. So we've already said there's all these items over here that have a value. If company has some debts and liabilities, okay. If you have more liabilities than you do assets, now we're going to look at what was your investment into the company. And if in fact, if there's anything left there, such as what they like to call retained earnings, or any money that you have contributed to the company yourself, any value that may be there, if it takes care of the remaining debts, then it takes care of it. If not, then you may have to shell out some more money to pay off people, depending upon what that debt is. And depending upon the agreement of the company may just be bankrupt. It works out multiple ways. And then vice versa. If the company has a lot of assets left, then what happens is, and you paid off all the debts, now the remaining amount goes to you as its owner, or it can get split amongst the investors as well. So it says, does this mean some things can be both assets and liabilities until they are free and clear, or are they still assets because they can be liquidated? So are you asking like a building? Okay. Yes. Yes and no. So the building itself would actually be an asset, right? Because the building is going to have a fair market value, right? What will be the liability will be the mortgage that's attached to it. So I hope that makes sense. And the mortgage is a loan. So the mortgage is the actual debt. The building itself is an asset. Yep. Okay, awesome. So I did see someone said that they're a nonprofit, and so I'm talking about equity right now. So I want to clarify something really quick when it comes to my nonprofit folks who might be listening right now. There is no equity when you are a nonprofit. That's the whole point. Right? So what happens is there's very much so still assets, right? And you can still have liabilities. Nonprofits are allowed to get loans and allowed to acquire debt to further the mission of their organization, right? You can do all those things. But what happens is the organization has what's called net assets, right? So if there's more assets than there's debt, if for some reason that organization was to decide to, the board said we no longer want to do this, no one wanted to continue it to go forward, no one can benefit from those assets. As a nonprofit, all of those assets would then need to be contributed to another nonprofit. Okay. And then if it's a reverse, then you would need to kind of talk to some, you would have to have some kind of conversations with some people. And they would have to, most likely what would end up happening is the non-profit would probably claim like bankruptcy and insolvency, and that, it would go from there. But if in fact, if it was positive and there were net assets of value left, then you, even though you may found the organization and you put all your blood, sweat, and tears into it, you would not be able to walk off with those computers or the furniture or buildings or cars, all the things that may have been given into that nonprofit, it would need to go to another nonprofit. That's how nonprofits work. So just want that to be clear. Key difference. Okay, so now that we went over some of the basic terms, I want to talk about best practices. All right, anyone want to gamble and put out there what they think the first thing I'm going to say when it comes to accounting you should be mindful of as its number one tip? Because I know it's said all the time, and I'm going to say it again because it needs to be said. Record keeping, of course, definitely document. Well, I'll get there, but that's not number one. No, no one's hit it yet. I'm gonna let somebody have one more. Oh, Nick is close. Nick is real close. Nick is definitely in the arena of what I'm going to say. Yep. Thank you. Thank you, Stanford. Yep. Keep personal separate from business. It is the gospel. And I'm going to explain why. It's not so much about it is about organization and such. It definitely is. It definitely makes things easier for you. But also too, when you're a business, for tax purposes, accounting, lending, licensing, grants, you name it, you are trying to show that the business stands alone, right? You're trying to show that you're serious. So when you have everything separate and established only in the business name, you basically are showing right up front, we mean business. Doesn't matter, we only made $100 this month. That $100 is pure. It's not mixed in with my direct deposit from my W-2. It's not mixed in with my rental payment. It's not mixed in with my car note. It's not mixed in with any of that. If I needed to somehow take some money from my business, for those of you who are for profit, then I wrote myself a check. I wired the money to my personal account and paid myself that way. Or, I set myself up on payroll, depending upon what kind of business you are. But what I didn't do is use the business debit card or just have my bills just automatically set up to come right out of that business account. That's what I didn't do. How many of you, I want to see, for those of you who are for profit, how many of you are set up as an LLC or intend to be an LLC? Okay. And if intend to be an LLC, plan on it. Okay. And then how many of you are corporations or partnerships? Because I know not everybody might be an LLC. Awesome. Okay. All right. I see you guys out here, you inking it up. All right. Okay. So the reason why I asked that is because the whole point of you becoming an LLC or corporation is because you don't want them to have a legal reason to ever go after your personal assets, right? Okay. But if you mix in your personal assets, especially if you are the only member of your LLC or the sole shareholder of your corporation, guess what you've done? You pierce what they call the corporate veil. You have now basically shown before, if it was to go to court or anything like that, that you treat your business like it's personal, even though you set it up so it wouldn't be so. Because there's one thing to do it, then there's another thing about intention and action. Okay, I really want you guys to always remember that, because that works definitely in the tax world for sure. There's what you say, and then there's your intention and action, right? Having that LLC is wonderful, and it does what it needs to do as long as you're doing what you need to do. You have to keep up your end of the bargain. So your end of the bargain is to not commingle. Can't stress it enough. There's a reason people tell you personal versus keeping personal separate from business. And the reason, all the things I said is the reasons why. So if you ever heard it and no one ever really explained it to you, they just kind of just said it because they just buzzword it out and they don't understand it. They don't understand it. Those are the main reasons why you do not want to commingle. Okay. Your LLC, for I believe everyone here is from Maryland, you pay that extra $300, right? I'm going to do everything in my power to make sure nothing compromises the protection that I'm paying that extra $300 to Maryland about. Trust me, it is my pet peeve in life. That $300 irks my soul. But anyway, the next one is use invoices and agreements. Okay. Number 2 for best practices. I can't stress that enough. And even if you haven't had your first sale yet, establish your invoice number. I'm going to share stories tonight. When I started my business, my first client was my mom and she paid. And she wanted to go through, make sure I had all my processes in place, which I would have done anyway, but it was important to her that I had all my processes in place. So I was like, I see where I get it from. And I made sure I set up my invoicing number and my invoicing number scheme. So I'm going to explain that to you if you haven't done it. She's client number 1. I set out, I think like 6 zeros before her and number 1. Cause like, depending on how big my company grows, I have more than enough space. And then same thing for the invoicing. She was invoice number 1, but I think I put out like 8 zeros in front of it. So that way it has room to grow. And if for any reason I forgot to beyond 8 spaces and I needed 9, that is a welcome problem that I will gladly face at that time. But I tell you this because I want you to take it seriously from day 1, right? Day 1, before they even come, set it up. Set up what you want your agreement to say. Be very specific. When it comes to your invoicing, if the person's supposed to pay you right then and there, say so. If you are working with governmental contracts or whatever, make sure that you are definitely following whatever your procurement agreement is and that it's written to the letter. If you haven't gotten there yet, and that's something you're looking into, invoicing will become the blessing and curse of your life. But you need to make sure that invoice is accurate, right? Same thing for your agreements. Spell out as much as you need to spell out, right? And sometimes it might need to be a little lengthy. Whatever you feel that you need to be understood between you and your customer, make sure it's in writing. Okay, cannot say that enough. But that's a part of your accounting processes as well, because then if for any reason there is a misunderstanding, you can say, well, it's in your invoice, or it was in your agreement. Here it is. And it's no longer he said, she said. It's no longer a text message that could have been erased. It's no longer a DM. Okay, I don't trust social media anymore. I was skeptical of it before, but after all these outages and everything that's going on, we got to go a little bit above even that. It's a good start, but definitely handle your business in DM if that's how you're getting your clients. Do what you got to do, but then come back and make it a little more official. When it comes to invoicing, don't feel like it has to be really pretty. It doesn't. PayPal, Stripe, Square, all QuickBooks, a lot of services now pretty much will give you an invoicing option like free, and it's very simple to do if you're afraid to do it on your own. You can come up with something in Excel even. So a lot of options there, but key things that you should definitely make sure you have. Make sure you have invoicing numbers that are in sequence. So make sure, you know, invoice number 1, number 2, number 3. If you have to cancel out an invoice, that's fine, but then go to the next number after that. Use the person's legal name whenever possible, okay? Don't want it just be to Tracy. There's a lot of Tracy's. Don't want it to be to just, you know, Jim or just to Jerome or whomever. Make sure you have their full legal name whenever possible. Again, this goes back to you always got to keep yourself covered. Even if it's your cousin, you love them, you know exactly where they live, but I've watched a lot of people's court during the day when I'm working my cases. And there's a lot of times family on there. So you got to treat everybody the same. Okay. And then for yourself, tip number 3, always get a receipt and a statement from your vendors. And it's the same thing, just the reverse. This is to cover yourself about your agreements and about how you are paying the people who are supposed to support your business. A lot of times when you're dealing business to business, you would think things would be a little bit easier and better, but all because you are coming professionally and correct does not necessarily always mean they are. I always follow rule of thumb. If for some reason they don't have invoicing in place, I like to shoot an email. That's just me personally, summarizing whatever agreement we had. So that way there's something in writing to go back on later when the case arises. But always make sure you get a receipt or invoice. A lot of places now will let you email your receipts. Take up on that option. So even for the smallest amounts, you never know what you might want to return. And again, you never know what you may need to prove. Coming from the IRS world, places like Target and Amazon, they sell anything and everything, right? And you knew that it was for business, but if I see $100 transaction right now, like this month in December, it could very much so be you trying to spend some of the last minute profits of your business, but I don't know if you went Christmas shopping. I don't know, but your receipt would tell me otherwise, right? So make sure you get your receipts. Very important. Let me ask you guys, how many of you feel as though what you have in place as far as either collecting money or working with your customers, how many of you feel like it's secure? You don't feel like there's any potential for like fraud, or like if you was to hire a VA today, do you feel like what you already have in place, someone could probably manipulate your numbers? And you be honest, no judgment, semi-secure. Okay. Thank you, Janet. Not there yet. Okay, Ann, I'm gonna talk to you. Nick, I have a feeling you on the next level. Anything is possible. Thank you, Blair, for your honesty. No. Okay. All right, Mia. All right. All right. So here's what I want to talk to you guys about: establishing internal controls. So yeah, I use a HIPAA compliant platform as well for my intake. So that's definitely something to look into. You want to start thinking about informational controls, especially now since everything is virtual, or we're moving more and more into virtual spaces and using technology. Password protection, right? You want to start thinking about username setup. You want to start thinking about establishing things so that way is uniformed and that is specific to your company. So you believe it or not, this, even though you're sitting here thinking like, well, how does this apply to accounting? It very much so does. Because if you have, if everyone shares the same password, and let's say you're raining up clients, I and let's say some money goes missing or a transaction was recorded incorrectly, who do you point fingers to? And yes, right now it might just be you, but I'm a firm believer of doing it now while it is just you, because then when the day comes that even if you hire a contractor, you already have a system in place where you're not trying to create it on the fly later. And so you gotta so I'm a firm believer of, you think of the business that you want tomorrow with what you have right now. Okay. And I'll say it again for those of you who might be taking notes. Think of the business that you want tomorrow with what you have right now. Okay. So what that would look like is, if you have something where, again, invoicing, make sure you have invoice numbers. If you don't have invoice numbers yet, create them. If you don't have customer numbers yet, think of them. And it doesn't have to be anything fancy. What's great about being a CEO is you get to kind of make this stuff up. You can literally just use numbers. You can use numbers and letters. You can do a whole lot of things when it comes to invoicing, but you can make these things up. And right now it may seem a little silly to you, but later it's going to be really important, because when you bring in somebody else and you notice an invoice or two is missing, and maybe some money is also missing, guess what? You may have a client who is reining up people just to pocket the money into their pockets and then voiding out an invoice. But because you have an invoice system set up, you could basically go in and check it. No system is foolproof. No, it's not. And right, there's a reason why multi-billion-dollar corporations still is liable for someone doing embezzlement, right? So no system is foolproof. But the reason why I'm pointing some of these things out to you now is because when you're smaller, every dollar matters, right? Every dollar matters. So when it's just you, another thing that you also want to make sure that you're doing is, the best internal control is going back and looking at, again, that bank statement, and then making sure that everything that's on that bank statement is what happened for the month, right? Not only is that good to check to see if anything happened on your account that's suspicious, right? But then also to check your bank. All because your money is there don't mean that they're doing the right thing. They could be putting on all kinds of fees, and $5 here, $10 there, depending on how much you're making. May not seem a lot, but at the end of the year, if they're doing that 30 times throughout the year, it's a lot of money that went out of the window. That could have been your new computer. That could have been a new printer. That could have been another thing of equipment for your company had you caught it. So definitely make sure you are doing things to go ahead and make sure you have those practices in place. All right. And then I'm going to talk about software real quick. So we're moving on to software. We could be probably about HIPAA and everything. I do want to say with software, I mentioned a few earlier. In general, no one software is better than the other. Having HIPAA compliance is cool, especially if you're dealing with very personal information. Like for myself, I deal with social security numbers and credit cards, and most credit card processors, I will tell you right now, they have their own compliances. But if you are keeping the credit card information for whatever reason, you may want to make sure whatever you're using is HIPAA compliant at that point. If you're using it outside of a credit card processor. So a credit card processor could be your Stripe, or what's the other ones, like Square, PayPal and such. Right. Exactly, Nick. Doing installment payments, sometimes it will cause you to have to keep people's information. So that's why you might want to look into that. But no one particular software um, is necessarily better than the other. Only reason why I say that is because it truly depends on several factors. Key ones are, one, what you can afford right now, right? So if right now, if it's in your best interest to get something that is free, then free it is, right? Um, if you can splurge and spend a monthly fee, there's some of the ones like QuickBooks and such. If you're a bigger corporation, or sometimes when you're dealing with certain contracts, they might require you to use a certain kind of software. So it may be outside of your hands, but there's no one particular software better than the other. What you just want to be mindful about software, though, is some of the things that I had talked to you about earlier. Notice I didn't mention you having to necessarily use software to use it, because when it comes to software, you still need to kind of double check it. Don't just trust that the computer is going to do everything right. Sometimes it double downloads information. QuickBooks is good for that. I will just say, I'm gonna just put it out there. It'll double download information sometimes. But usually when you do bank reconciliations, basically going through the bank account and looking at the numbers that's in the software, you're able to catch some of those errors or mistakes. And one day, for those of you who may not be there just yet, your money's going to get so complex, you will need help. You will need help. It's not even a matter of if, you will. And that's a good thing, because what that's going to do is it's going to free you up. It's going to free you up to do what it is that you do best, whether it's getting clients, performing your services, contributing to your cause, whatever the case may be. You may hire someone externally, you may hire someone internally, and have an actual bookkeeper or an accountant on staff. But one day your money is going to get too complicated. You're going to need to do it. Have someone help you. So really quick, I was going to have us do like a quick exercise of this, but real quick, I just want to show you guys an example. So when the day comes and your money gets too complicated, this is literally what a balance sheet looks like. This is what I was talking about before when I said assets and liabilities and then shareholder equity. For my nonprofit versus a balance sheet, it would be a financial position statement. So it wouldn't have this equity section. It would just have assets and liabilities and then net assets. So, but that's literally your balance sheet basically. So income statement, what we kind of talked about earlier: revenue, profits, earnings. And then this is horrible, but this is cash flow. And we're going to talk about cash flow later. So I want for us to, so we went a little 3 minutes or over. Sorry, Colette. But I want you guys to go ahead and go on your break. You got 5 minutes.
So the question in the chat said, does the pitch need to include the numbers? Your pitch might not, but a question may be asked of you by one of the judges, similar to what they do on Shark Tank, about your numbers. So I would know your numbers. So even if you're just starting out, it may be what you think you may do. Does that make sense? Is everybody still there, or did they just start? Did we dart off? Okay. All right, so it's break time, and I don't have it's 7:50. Can we be back at 8 o'clock? See you at 8.
Pay way too much in taxes, and I would love to change that in my life. And if that's not a current problem yet with your business, I'm sure that is something that many of you will look forward to possibly having be a future issue, because um, taxes are only taxed on taxable income, meaning you have to remember, we talked about net income, net profit. You have to have net profit to pay taxes. So there's that part. But as a business owner, outside of income taxes, there are other taxes. So there's employment taxes, there's self-employment taxes, and self-employment taxes, I actually have a whole workshop on that, but self-employment taxes is a breakout of on your paycheck. For those of you who are used to being wage earners, it is Social Security and Medicare, or Medicare. So it's that amount that you're used to seeing on your paycheck. It's those percentages being taxed onto your net profit. That's what self-employment tax is. That's all. So how you're used to seeing it coming out of every paycheck, people pay it quarterly once they're in business and they have a profitable business. So that's that part. Then once you get into a position of having employees, you will pay your employer's portion of your Social Security and the Medicare. So again, for those of you who are used to getting a W-2, you see at the end of the year, that total amount that comes out for Social Security and that amount that comes out for Medicare based off of your wages. Your employer paid the exact amount on your behalf. So it's a matching amount. So the difference is when it's a wage earner, the employee, they only paying half of it. When you are self-employed, a part of self-employment tax, now you are the employee and the employer of your company. So using the example of your W-2 again, take that amount, times it by 2. If your profit, remember again, if the profit of your business was equal to how much you made for the year on your W-2, that could possibly be your self-employment tax. So again, that number would always change, fluctuate depending upon what your net profit would be, but that is self-employment tax in a real tight nutshell. Unemployment taxes, basically same thing. It's something that's paid on net income, but then also too, when you are an employer, you would be paying unemployment taxes for your employees as well. For those of you who have products, and I'm going to talk because they've changed some things, especially since COVID happened. Some states now are treating digital products and making digital products subject to sales and use tax. So you have to be mindful of that. Sales and use tax now is dependent upon how many items you sell and or the total amount. Is usually in like the several hundred thousands as far as the amount, or it could be anything over 100 units or so, and it varies per state. So there's 50 states. So sales and use tax can be very tricky. A lot of software is pretty good in keeping track of that. Be mindful of it. If you sell digital products, don't think it's just physical products. And for my service people out there, a lot of us are multi-passionate. A lot of us find other ways to monetize our services. So for those of you who may have books that, if Amazon is not actually shipping out that book for you, you purchase the book and then you're buying it wholesale and then you're selling it to the end user. That's a sales and use tax transaction. You may have to pay sales and use tax. So be mindful of all those possible transactions. That is something to keep in mind. Don't think just because you overall provide a service, you may be subject to that. So just be mindful. And again, some states they're offering a little bit of leniency based off of the amount and the volume, but it varies per state. Property taxes. Property taxes is what it sounds like. If your company actually owns property in its name, the company may be subject to having to pay a property tax. Excise tax. I saw the one lady say she does massages. Excise tax is typically on something like tanning booths. How do you find out that's info for your state? For Maryland, you would go to the comptroller's website, and then each state has its own taxing authority. So you could literally Google and just say that state sales and use tax, and it's typically something that ends with a gov is the actual state authority. You're welcome, Eileen. Excise tax is fuel for the fleets, tanning booths, I want to say fishing shops. It's like weird. It's taxes on like some of the strangest of industries. Medical professions, though, are subject, some of them are subject to excise tax, and it's usually like medical supplies. So again, it's very industry specific, but that's an additional tax. And then my pet peeve on God's green earth, personal property tax. For those of you who have not established an LLC or incorporated your business yet, Maryland basically said, because of the fact you decided to legitimize your business, we just want you to pay $300 because we can, because then they also send out an actual other bill later once you actually file the form, if in fact you actually owe a personal property tax. So, you know, that's it's just my personal pet peeve. But other states also sometimes have very state specific taxes. So a lot of people also always talk about Delaware, right? They're like, oh, Delaware, you don't have to pay, you know, taxes there. For income taxes, you don't. There's not a state income tax, but for their businesses, they do tax you on the gross revenue. Remember, we learned that revenue is everything that's coming in before we even take out any of the expenses. They do tax businesses on their gross revenue if it's at a certain level. So again, be mindful. I put the personal property taxes because that's very Maryland specific, but every state, when it comes to businesses and small business in particular, has something very specific to them as far as taxes are concerned that they might want you to pay, that they may not require those who are wage earners to pay. So we can talk about that a little bit. We'll get there. So we are already established. Most people wants to be their LLCs. And let me get out of here. Go back to previous. Most of you guys are LLCs right now. So most LLCs are taxed as a sole proprietorship, meaning that even though legally you are an LLC, for tax purposes, they're going to treat it as a part of your personal tax return. So if you have never filed, this is what it looks like, right? Name, if it's under your social, you never got an EIN, it would go here, whichever way. The different accounting methods, as you see, this goes back to what we were talking about with the accounting. Gross receipts, cost of goods sold returns, all right here. And then if you had cost of goods sold or any returns or refunds to your clients, the net difference, that's all that top part. And then, as you stated, write-offs. You said, can you go back one slide a moment? I'm gonna go, I had went too far ahead, so I'm not quite sure what slide you're talking about, Blair, but I had went too far ahead. I'm heading back that away. Let me see, Shelly. It says digital under sales tax, any services that could be under there as well. Is that correct? Yes, digital products and physical products. Yes, since 2020, some digital products are very much so under sales and use tax now. and it does vary from state to state to state. Maryland is one of the states that want potentially for you to pay for digital products once it hits a certain volume. So I want to say right now, Maryland is like if you sell like 100 or more of an item, or if you make like over $100,000 or so with that product, you may be subject to sales tax. So again, it's just, and that's just one state. Every state is different. So you just need to be very mindful. Now with expenses are pretty much straightforward. They really are. I mean, advertising, I think the biggest one that a lot of people forget about all the time is when you sponsor an event. That's a part of advertising. Like if you decide to be a sponsor, that's advertising, because they're going to, so say that so and so is a sponsor of this event. It's a deduction. There you are. Contract labor, some of these are very straightforward. If your company had a mortgage in its name, legal and professional, I tell people all the time,